Boca Raton, this is your local real estate market update as of July 1st, 2025. We're through Q2, and some of these trends may surprise you, and some won't. I'm Larry Mastropieri, broker owner of the Mastropieri Group, right here in Boca Raton. Let's do this. Once again, we're going to start off with our days on market data. Tracking this stat is a great way to understand how much our market has slowed dating back to last year. When we look at the average cumulative days on market data from June of 2024 and compare it to June of 2025, we're seeing a 4% increase. This is a major improvement from last quarter when we reported a huge increase of 28%. And the crazy part is, the quarter before that, we noted a 35% increase at the end of 2024 versus the prior year. Any way you slice it, homes are continuing to sit on the market longer than ever before. The average home for sale in Boca Raton went from 74 days to now 77 days on market before accepting an offer. And if you look at the median days on market stat, it's 36 days to 43 days. That's a 19% increase. This means the market is continuing to soften. If you've been tracking these stats in Boca Raton over the past several years, a lot of this probably isn't surprising. Since mid to late 2022, when interest rates started to climb, and we've talked about this, we've seen the days on market increase slowly. That continued all the way through May of 2025, hitting a recent record high of 86.8 days on market. However, believe it or not, an average days on market stat in the 80s isn't the end of the world. Between 2015 and 2019, this was the norm. Real quick, I just want to take a minute and remind you, if you're enjoying this video and getting some value from this content, please hit the like button and subscribe if you want more real estate market update content just like this. Now let's get into some of the home sales price data, which is pretty interesting stuff. If you recall, through much of 2024, we witnessed a bizarre theme with the average sales prices. Normally, when there's an increase in days on market, increase in inventory, we can expect average price growth to stagnate or drop due to slowing demand. Well, so much for that, because when we closed out 2024 last year, the data showed an average of a 24% price growth compared to the year before. So Boca Raton housing prices really defied financial logic at that moment, at least for a while. Now we're midway through 2025 and we're back to reality. There was a very noticeable dip comparing June of 2025 to June of last year. The average sales price dropped from $1.171 million to $1.028 million. That is a 12% decrease in home values. I think it's really important to articulate the gravity of this stat. We haven't seen a negative price growth stat like this in a very long time. For the last 15 years, prices have increased year over year consistently. It's 2025 now, and as they say, what goes up must come down. Prices are officially coming down. In fact, quick real-life example that I think will add some value or drive home this point. Most of our clients are sellers who purchased previously between January 2022 and present day are having a very hard time reselling their property at the price they paid for it. In fact, most of them are selling property for less than what they paid for it in 2022. If that doesn't drive home the point that prices are falling, I don't know what does. But when it comes to housing markets like Boca Raton, you know I always feel the need to cross-check the average data with the median data. And you might ask why. It's primarily because I want to make sure random large deals aren't misleading us. Because in places like Boca Raton, you may have a few super high-end transactions in any given month, and those outliers really could skew the averages. If we look at the median sales price data from June of 2024 and compare it to June of 2025, you can see here in Boca, we've experienced a whopping 10% decrease in the median sales price. In other words, what you may have paid for a house in June of last year, today it would go for about 10% less, which I feel is a very realistic outlook for the current housing market. And to drive this point home further, both the average price data and the median price data are pretty close, suggesting prices are coming down. And I don't think this is a singular one-off event. Since March of 2025, we've seen negative price growth stats, and we will likely continue to see this through the rest of the year. What's a little ridiculous though, if you look at the average list price data, you will see that sellers are listing their homes for 2.92% more than the same time last year. I don't think many sellers in this market really are appreciating the gravity of the situation. I'll explain. If prices continue falling at 12% per year on average, technically sellers are losing 1% in value every month as they sit on the market overpriced. Thinking you can get more than last year or more than 2022 values is typically a recipe for losing even more money in this market. I usually tell sellers this. In 2020, a seller with an above market price made a lot of money by being patient because the market pricing went up. In 2025, history will likely show that a patient seller with an above market price will lose money. Note that while the average list price is up almost 3%, the median list price is down 3.54% at this point. There are a lot of signals telling us prices are coming down. I'm really curious what everyone else thinks. Drop your thoughts in the comment section below. The sale to original list price ratio shows that a lot more homes are selling for less than their original asking price, and I'm sure you can see that from all the price drops online. To give you this perspective, dating back to March, April, May of 2022, most properties were selling for asking price or even higher, i.e. 100% plus sale to original list price ratios were very common then. Then in 2023, we saw a slow and steady drop. And in 2024, properties sold between 9 and 10% less than their original asking price on average. And through 2025, it has stayed right at that same mark between 9 and 10% less. We should give those record sale to original list price ratio stats from 2 to 3 years ago legendary status because those days are over, and the fact that there has been this much consistency in the sale to original list price ratio over the past 12 to 15 months really supports the theme that the market is close to an equilibrium state. And here's some perspective on that. Through 2015 and 2019, homes were selling for about 8% less than their original asking price. So my takeaway, this is really what to expect in a stable South Florida market. With all these changing sales numbers, the next logical question is how many more or less homes are we seeing for sale in the market? The number of listings data helps us explain current and anticipated inventory in our Boca Raton real estate market. And as we all know, real estate prices are a function of supply and demand. As of July 1, 2025, we are seeing an increase in inventory compared to the same time last year. This increase isn't quite as large as what we've seen at the end of the previous year, 2024, which was a 23% increase, but it's still a considerable increase in homes on market. But I'm really not panicking over this, and I don't think you should either. This number is obviously higher than the same time last year, but when we compare it to Palm Beach County inventory levels historically, over the past 10 years, we are right around the highest inventory levels over that period of time. I still don't think where we are is really bad. It's just an issue or a question of whether the trend will continue to grow or will it level off. And I have my opinions on this. I'll share those later. And here is some additional data that I think will help you form your own conclusions on this topic. In June of 2025, our real estate market closed 366 homes. And we added another 604 new active listings. Clearly, we're adding more homes than we are selling. Let's dig a little deeper though. The second quarter of 2025, we sold 14% less homes than the same time last year in 2024. So selling less homes, and we are seeing a steady increase in homes being added to the market. It seems like this trend will continue. Hey, real quick, if you feel my analysis, the data we're presenting is helpful, but you have questions, maybe you want it more focused on a neighborhood or more broad. I love this stuff. I built some awesome spreadsheets. This is one very important part of what we do for all our clients when we work together. But I'm happy to share, so feel free to reach out, click below, we'll talk soon. This is another key data point that I look at. It's the absorption rate, which is a very good way to gauge whether it's a seller's market, buyer's market, or a neutral market. So you may ask, what is the absorption rate? Well, if no new properties were added to the market and sales continued at a steady pace, it shows basically how long the current inventory of the properties on the market would last at the current rate of sales. The absorption rate trend here in Boca Raton has been on a steady climb dating back to fall of 2023, and it continued through the first quarter of this year. The absorption rate is now 7.27 months, which is higher than it was a year ago at 5.81 months. Typically, a 5-month to 6-month absorption rate is considered a neutral market, and anything above 6 months is a buyer's market. Obviously, anything below 5 months is a seller's market. So you can see with the absorption rate above 6 months, we are in a buyer's market territory. It's important to know that historically, pre-2020, the absorption rate has been in the 5s, i.e. a neutral market. So the data is suggesting that we are in a weaker market than we've seen pre-2020. That's a bit of a signal prices could fall further. That's all the data I have for today. Thank you so much for sticking with it. Now though, for my final thoughts. While almost all data points we reviewed signal a market that could slow down further, it's clear to me that the market is not in a free fall state. In my opinion, it feels safe for buyers and sellers to transact right now. Now, we need to put an asterisk on a few things. As the market is adjusting, some residential asset types are in a better position than others. I'll give you an example. Single-family homes in non-membership equity communities are performing better than the general data we just discussed. Every asset type is still experiencing softening though, but single-family homes overall are living in a slightly stronger market, while condos are living in a much softer market, generally speaking. Also, different price points will feel differently. Very affordable quality housing is selling fast in our experience, and the ultra luxury, 3 million plus, is still pretty healthy. New construction versus resale property has different vibes too. New construction is selling relatively quickly, with many luxury communities selling out pretty fast. From my experience in the field, selling about 150 homes a year and holding 40 active listings at any given time, homes in top condition and good locations that check all the boxes will continue to be in high demand and command top dollar, while in contrast, properties that don't measure up will be more challenging to sell. And that's just what happens in a market with increasing inventory or waning demand, and frankly, we're feeling both right now. Right now, if you're a buyer, you have more negotiating power in a transaction, and you might see better buying opportunities as time goes on here, but don't wait forever. Watch for the right opportunity, get the right property, and then execute. Prices are unlikely to drop enough that waiting will be life-changing / worth it. And here's what I've been telling sellers. None of us have a crystal ball, but it's more likely that prices come down than go up over the next year. And to build on that, if prices do come down slightly or by 12% as the trend is pointing to, how long do you think it will require us to hold that property to get back to 2022, 2023 values? It's likely going to be 3+ years. So if sellers are focused on that last dollar in this market, remember, if this thesis is true, which it's more likely true than false because unaffordability is at record highs in this market, then you're either selling now or waiting at least 3 years before you can get back to that dream number. Again, patient sellers in this market will likely get hurt, unlike 2022 when patient sellers did very well. Overall, where we're trending is healthy in my opinion for the market here in South Florida and Boca Raton. We still have positive population growth, strong state financial incentives, and employment growth. I wouldn't buy into the myth that people are net leaving South Florida. I just don't think it's true. The future, in my opinion, for South Florida is sunny. Thank you again, guys, for tuning in. We know the market here in Boca Raton because we sell more homes than anyone else. So if you have any questions about the market, please don't hesitate to reach out. Again, I'm Larry Mastropieri, broker owner of the Mastropieri Group. I will see you guys on the next video.